just to prevent me from coughing, so please bear with me. If you look on the right side, we've got a world map, and all of the areas in gray are areas where BDO has offices and a presence. So you can see we actually have a global footprint in all of those areas. Our business is basically divided into audit and assurance, advisory, tax, and business services. So starting off with audit and assurance, we provide audits of financial statements. We provide donor-funded project audits as well. We do special audits. We do audits for internal controls and special projects. We provide training for IFRS, as well as all the other standards, accounting related, and anything else that's current. So, do attend our webinars. And then we also have taxation services. Within taxation, we have our normal due diligence, taxation, compliance services, where we provide your do your tax returns for you, tax advisory services, tax audits, and tax health checks. We have a very strong practice for transfer pricing. We also fight cases for tax disputes, and we have a good track record of actually winning cases against KRA. So do look to contact us if you've got any large penalties that have been fined on you, and you think you may have a case there. You can contact us, and we'll take over, and we'll probably do a very good job at it. We do provide services for expatriates as well, and we provide international planning, corporate planning, taxation advice. And then we have a department that provides outsourced services. So, we do books, bookkeeping, accounting for people. We compile their statutory annual reports. We do management reporting for them. We can act as a financial management agent. We do payroll. We provide company secretarial services, and also administrative and accounting services. And more recently, we've also started providing legal services as well. And we have in-house lawyers, who can take care of any legal advisory services you might need if you can't afford a legal team yourself. And then I basically head the advisory division. So within that, we provide internal audit and risk management services, a full range of risk advisory services. We do provide the basic consulting services in terms of business planning, strategy, and so on and so forth. We provide corporate recovery and business turnaround solutions. We have a strong team for corporate finance and transaction advisory services. And some of you may not know, BDO actually is the largest transaction advisor in terms of number of deals globally. We're actually number one. We not in terms of the dollar amount, but just in terms of the number of deals we do. So that's, and then we provide data protection and data privacy services, and also sustainability services. So let's talk a little bit about what we're going to talk about today. And starting off with a introduction first, I want to talk a little bit about fraud. As we all know, fraud is a significant threat to organizations. And when it happens, it can have devastating consequences. So let's start our discussion with an understanding of what fraud is. Basically, fraud is any activity that relies on deception. So that's a key element to deception in order to achieve a gain. And that's a very basic definition of fraud. It becomes a crime when it is known and there's a misrepresentation of the truth or concealment of a material fact, which induces one person to act to his or to her detriment. In other words, if you lie in order to deprive a person or organization of their money or property, you're committing fraud. These are the legal elements of fraud. So starting at the top, First of all, the amount should be material, and it's got to be something that's falsified. So a materially false statement, or a materially false document, or a materially false representation. The second element, and these are the elements that they look for in a court of law. So the second element is knowledge. Knowledge by the perpetrator that when the statement or action or document was being generated, it was false. In other words, there was a clear intent. The intent of the fraudster can be established. What's going through his mind is to deceive somebody. And then the next one is damages, which result from the victim's reliance on the false or falsified statement or false documents. And then finally, there's the reliance on the false statement by the victim, which is basically deceit and sorry, damages. So the victim actually suffers damage as a result of the reliance on the victim's false statement. So those are really the four elements. One, it's material, it's false. Two, it was deliberate. Three, there was deception. So there's a cover-up. Normally you'll find fraudsters will commit a fraud and then they'll try and cover their tracks so that they're not detected, and they can then do as much damage as possible. And then lastly, obviously, the victim suffers some sort of damage, and it doesn't always have to be monetary damage. Then we look at the main categories of occupational fraud. Now, we've been presenting this on a number of our webinars, and we're basically going to the Association of Certified Fraud Examiners report to the nation. This report started in 1996, and since then they've been issuing it annually or sometimes biannually, and they have analyzed more than 20,000 cases of occupational fraud. These are real frauds, which their members, such as myself, I'm a certified fraud examiner, so I'm a member of this association. So they will conduct surveys where they will ask members to anonymously, without disclosing any confidential information, provide certain information to show the scale of the fraud, how it's committed, and so on and so forth. So this is what they do. And what they've found is that in all these years, the schemes which are used by occupational fraudsters, they've stayed remarkably consistent. Even with the move towards digital payments and technology-based businesses, the means that fraudsters have used to acquire their ill-gotten gains, those have withstood the test of time. At the highest level, there are three primary categories of occupation fraud. Asset misappropriation, which involves an employee stealing or misusing the employing organization's resources. And this occurs in the vast majority of fraud schemes, in 86% of the cases. However, the losses when these kind of schemes happen is usually quite small. Well, small in relative terms. For some businesses, $100,000 would not be small by any standard, but that's the median loss. So if you had 100 companies, some would have been much higher, some would have been much lower, but that's the median loss, and that's 100,000, the average median loss of those 100 companies. So you can see it's a big number. In contrast, financial statement fraud schemes in which the perpetrator intentionally causes a material misstatement or omission in the organization's financial statements, these are the least common. It only happens in about 9% of the schemes that we've come across. But when it happens, it's the costliest category of occupational fraud, with a median loss of nearly $600,000. And then the category in the middle, the third category, which is corruption, which includes offenses such as bribery, conflicts of interest, and extortion. This falls in the middle in terms of both frequency and financial damage. These schemes occur in about 50% of the cases, And when they do, they have a median loss of about $150,000. So you can see any kind of fraud is bad for your business. And occupational fraud, whilst we're still here, is very likely the most common form of financial crime in the world. And there are two key reasons why this type of crime is so prevalent. The first is that any organization with employees must, to some extent, entrust those employees with access to or control over its assets, whether that means keeping its books of account or managing its bank accounts or safeguarding its inventory and so on and so forth. It is this very trust that can make organizations vulnerable to occupational fraud, because all frauds at their heart, they're based upon breaches of trust. And this is an important lesson to learn, that yes, we must trust our employees, but trust without controls, trust without adequate oversight is often the reason why frauds happen and sometimes go undetected for very, very long. And the second reason why occupational fraud is so costly and so common is simply that there are so many people in a position to commit these crimes. Now, if you look at the global labor force, at the moment we're looking at what, 3.3, maybe 3.5 billion people working. And a large majority of these people, they will never steal. They will never abuse the trust of their employers. But even if a tiny percentage of these individuals cross the line, the result is millions of occupational fraud schemes being committed annually. And this is where the problem is. There are so many people in your organization who, without adequate controls, without checks and balances, have got opportunity to steal. That these kind of frauds are very common. And in fact, a statistic is that every business loses about 5% of its turnover to fraud. The only thing is they don't know. That's it. You don't know. So even though you're reporting your numbers, you can assume 5% of that somehow, is being taken from you. So the idea is to have a team that ensures that you're minimizing your losses to fraud. I want us to look at the fraud taxonomy. And this is almost like, when you go to a doctor and he has got a chart of the key symptoms, the key things to look out for when a patient comes to him and he's sick. Well, this is your chart for fraudsters. This tells you the kind of frauds that can be committed. And your first step in terms of fighting fraud is to get your staff, your directors, your management to understand how these frauds happen. You have to be able to understand, how does somebody, say, for example, commit a billing fraud? So a billing fraud is where a person causes the organization or the company to issue a payment by submitting invoices for fictitious goods or for services, or inflated invoices, or invoices which are for personal purchases. The employee might create a shell company and then bill the employer for services which were never rendered. Or the employee might purchase personal items and submit invoices to the employer for payment, and so on and so forth. So I don't want to spend too much time on this, but this is really important. It's really important that you understand where fraud can happen and what are the risks and what are the controls you have, and then are those risks and controls mitigated. This is basically your fraud risk assessment. So just ensure that in every organization you're doing a fraud risk assessment every year, and it's something that covers all of your high risk areas. That's probably the key lesson here. Let's look at how frauds are detected. And again, if I'm going to leave you with one tip on how you can bring more money to your bottom line, it's on this slide. So this is gold. It's known by most people, but this is gold. You know, fraud is not detected by external auditors. You can see only 4% of frauds are detected by external auditors. Internal audit detects 4 times as many frauds, which is about 16% of frauds are detected by internal audit. But look at the top one, which is tip-offs. Nearly half of all frauds are detected by tip-offs. And who is tipping off? The organization. On the other graph, you can see more than 50% of those tip-offs come from employees. So the lesson here is you have to have the trust of your employees. Your employees have to feel that this business belongs to them, that there cannot be any leakage in this business, and there's no place for people without integrity, people who are corrupt, people who want the easy route. And your employees should be encouraged to report any instances or suspicions of fraud, because your employees are your best police. You can police your organization through your employees. The sad reality, unfortunately, is that even when employees can see a blatant fraud happening right under their noses, because the environment's just not there, because they haven't been given the protection, because they haven't been made to feel part of the organization, they simply look the other way and they say, well, this is not really my problem. If they detect it, fine. Why should I stick my neck out? Okay, and why should I report this? Why should I risk my own personal safety? So I think this is a big thing in terms of your organization culture. If you can win that battle where your employees understand that your organization is their organization, and this is something that everybody has to fight, then this is the best protection for your organization. Right. What I'd like to do now is to hand over to my colleague Roger, who's going to take us through real cases of that we've investigated, and then give you some lessons on how we did it and what we found and what are some of the key learnings there. So, Roger, all yours.
Thank you, Zahir. Hi, everyone. I hope you're all well. Thank you for joining us today in this webinar. For those who've been with us, as you know, this is the last installment in the series of our forensic webinar series, and it's titled Fraud Files Unsealed. As Zahir has talked about and has reiterated the meaning or the types of occupational fraud and everything to do with the legal elements of fraud and the fraud taxonomy and how fraud is detected. So being the last installment, we felt it essential and vital to reflect on some valuable insights that we have gained in our practice from real life fraud cases that we have investigated before, and help give you some clarity in how to make decisions regarding fraud in your own organizations. As you know, we've done 3 webinars which you can go and rewatch on our YouTube channel. We started by talking about the managing how to manage whistleblowers to confront fraud. Then we explored the pivotal role of HR in fraud prevention and detection. And then we went into the crucial steps that you should take after detecting fraud in your organization. So we felt that for this final series, for this final webinar in this series, it would be good to look at some real life narratives where we move beyond the theory that we have given you in the past webinars and hypothetical scenarios, and look at actual challenges and tangible fraud cases that we have seen. It will be important to witness the application of some of the principles that we have shared in our previous sessions and some of the dynamics, warning signs, and even methods of detection and prevention that we have shared. So I'll start with the first one, which was a case of donor funds misappropriation. In this case, obviously, we're not going to share any specific client details or any specific instances. We've just chosen some very 5 key ones that we felt that span across multiple industries that we felt would be crucial enough to share this vital information with you. So in this particular case, we were engaged by a very prominent nonprofit organization to conduct a comprehensive forensic investigation into allegations of financial irregularities at one of their grant recipients. And the objective was to investigate allegations of potential misappropriation of donor funds during the implementation of the project. As you know, donor fund misappropriation usually involves the use of the unauthorized or fraudulent use of donor funds that were intended for specific projects or initiatives. And usually such misconduct threatens the organization's credibility. It impacts on donor trusts and even ultimately the ability for the donor to fulfill its mission. So we'll split the case file or the summary into 4 areas. One, we'll talk about how the fraud is discovered. This particular fraud was discovered by an anonymous whistleblower report. So an anonymous whistleblower who was an internal staff of the grantee came forward and shared a report with the donor, that was a nonprofit organization, into some of the allegations that into some of the irregularities that they were experiencing within the organization. How we ran our investigation, this majorly involved a series of forensic accounting and analysis of financial records. So particular to the donor organization, we looked at some of the financial records, like the financial reports, budgets, grant agreements. We also conducted interviews with very key personnel in the donor. We used our forensic accounting methods and training to trace the flow of funds from the donor into the grantee's account and how they were expelled now from the account and how they were utilized and who withdrew the funds and anything to do with the flow of funds. We usually call that following the money. We cross-referenced these financial transactions with actual supporting documentation, and we scrutinized those supporting documentation provided by the grantee in relation to the grant agreement and the utilization of the donor funds. We also, as part of this investigation, analyzed the whistleblower's claims and the circumstances that were surrounding the allegations. So the key findings of this investigation included a large number of illegitimate expenses, what we call fraudulent expenses that were provided in support of money that was actually misappropriated by the grantee. We also, in our analysis of the supporting documentation, identified a large number of falsified records that were not in alignment with the intended purpose of the grant. This included falsified invoices, falsified receipts, and lack of a following of the procurement process, and many such irregularities that amounted to falsified records. We also identified a large number of bulk cash withdrawals, usually with when we've investigated cases of donor fund misappropriation. What the alleged perpetrators normally do is, instead of utilizing known common methods of transferring cash, that is either mobile money payments or direct bank payments or checks, they will withdraw the cash in bulk. And this usually is to limit or impede the audit trail so that you're not able to know what the cash was used for. And this is one of the red flags that we've talked about in our previous webinars of fraud. With this, we were also able to identify the perpetrators by following the money and utilizing our interviews. We were able to identify the perpetrators of the fraud. For the mitigation strategies, and these are the recommendations that we provided to the donor for future implementation, included strengthening the financial controls, implementing oversight mechanisms to prevent unauthorized access of these funds. We recommended that they implement regular and independent financial audits of their grantees to ensure that they comply with the grant agreements and they utilize the funds properly. We also recommended transparency by regular communication of the financial reports to the donors that showcase the impact of the funds that they used. We also recommended that they establish a confidential reporting channel for whistleblowers. As we saw here, and as Zahir had mentioned initially, whistleblowing, which is the tips, is the highest method with which fraud is detected. So we recommended that they establish a very confidential method for reporting fraud for all their grantees. So anyone within their grantees can use this method, and this will ensure that if there are any future occurrences of fraud, both within this organization and with any other, they will be able to catch it and investigate it immediately. The next case that we would like to share with you is a case of inventory fraud. In this particular instance, we were engaged by a leading retail and manufacturing organization to investigate a very concerning case of inventory fraud that was following the discovery of substantial variances or discrepancies during a routine stock take. How this fraud was discovered, obviously there was an analysis of the routine stock takes, as you know, within this retail and manufacturing industry, they normally do daily, some weekly, and some monthly stock takes. So within the routine analysis of these stock takes, one of the employees identified significant stock take variances that were indicative of missing stock from multiple branches of the organization. So they inquired within the team as to the reason for these variances, and they obtained incomplete explanations and a lack of supporting documents and such things. So they engaged us to conduct this investigation and identify the root cause of these variances, whether they were actual variances, accounting irregularities, or variances that were caused by fraud. So the process which we followed was, first, we conducted an independent stock take of the organization, the particular stock areas that they were looking at in the particular branches. We analyzed the stock take data. We looked at the sales data and any stock movements, tracing them within the scoped period. And we also looked at the inventory management system. We conducted site visits to the organization to physically verify the existence of some key inventory items. This was large inventory items, so they could be verified physically. We also scrutinized the explanations provided by the organization, including part of the biggest claim for this significant variances of an auction that was done that was not recorded properly. So there was claims of auctions and claims of wrongly invoiced units and units that were taken with customers. And part of it, we also looked at conducted computer forensics. So computer forensics is whereby once we identified the suspects, the people who were involved in this particular inventory movements, we analyzed their computers. We forensically imaged and analyzed their computers to establish any findings that were related to this particular fraud, alleged fraud. What we uncovered was a very pervasive inventory scheme, where large quantities of goods were missing, were diverted from the organization's stock. These were diverted from the system, and they were not merely clerical errors or accounting errors, but the findings indicated intentional manipulation of the inventory system to cause misappropriation of the goods and cause the inventory to miss. So by tracing the movements of the inventory and the missing items and cross-referencing it with the sales data, we were able to identify very specific patterns of fraud, including the computer forensics. So we were able to identify the particular actors of this fraud and the internal theft. We also looked at, identified a potential concealment strategy, which was the auction that we had previously mentioned, and key individuals who are involved in this, that perpetrated this fraud. Some of the mitigation strategies that we recommended were more for the organization to implement more stringent access controls of their stock areas and surveillance measures, for areas with high value inventory. We also recommended that they conduct regular and surprise stock takes, to be able to deter any fraudulent activities and ensure accurate inventory records. We recommended that they implement RFID tagging of some of their stocks. These were stocks that could move in nature, they were dynamic in nature. So we recommended that they implement and purchase RFID so that they can be able to track and trace their stock movements, and also to update their inventory management software. The third one that we'd like to share is a different one. This was a case of an accounting fraud. In this particular instance, we were engaged by a very prominent educational institution to conduct a forensic investigation into allegations of fraudulent credit accounts to some student accounts that resulted in significant implications for the institution. Again, how this fraud was discovered was via a tip. This particular tip came from a junior accountant, and they just raised an alarm as to some of these fraudulent credits that we were meant to investigate. Our investigation entailed looking at, again, we first begin with forensic accounting. So looking at some of the movements, some of the journal entries, the credits and the debits, and anything that was specific to this particular institution's accounting system. We also extracted some of the system logs from the system that we were using so that we can be able to identify the people who are moving credits and debits in and out, and how they were moving it, and whether they were valid or not, whether they had the particular access or the particular access rights or approval workflows implemented within the system. We also conducted multiple interviews, both with staff, the accounting staff that were involved in this accounts, and the students that were involved. We identified from our investigation a number of fraudulent journal entries that caused a large loss to the educational institution. We also identified the fraudulent payments, whereby these credits were not just errors as was to be investigated. They were also meant to obtain payments from the students instead of them paying directly to the institution. We also identified a number of weak internal controls that led to the fraud, including a lack of oversight, including lack of proper segregation of duties, and lack of the approval workflows in the system. Part of our recommendations was a strengthening of the oversight of the system, of the whole accounting system, so implementing of the approval controls, approval workflows, proper segregation of duties, robust reconciliation, improvement of the internal controls, and three-way approval, whereby one person doesn't have the authority over a full transaction. That one transaction should be matched. Maybe when one person initiates a credit, a second person reviews that credit, and then the third person approves that credit. And that way, you limit any instances of fraudulent credits. The fourth one that we'd like to look at is a case of corruption. This was an alleged case within a reputable logistics company, where they engaged us to conduct a forensic investigation into suspected financial irregularities revolving around questionable supply invoices and allegations of corruption. Again, this fraud was discovered through an external whistleblower report. So an external whistleblower who was part of the company, part of the suppliers of the company, reported that there's something fishy going on. And so they called us to do a forensic investigation to verify this finding, these allegations. Again, we conducted an investigation. We did a meticulous examination of the financial records. So this included a three-way matching of the financial records. This is from the supplier invoice creation to the approval and to the supporting documents and to confirmation whether the supporting documents to confirm whether the work was actually done. We also looked at the procurement process, whether it was followed in its entirety. We analyzed the system logs to look at who were the people who were initiating and passing these invoices and approving them. And also we conducted interviews with the people who were involved in each step of the process. What we uncovered was a large number of fraudulent invoices. Basically, these were invoices that were shared to support payments for services that were not rendered to the company. And these invoices were approved and paid because the senior manager who was in charge of this process was corrupt. So the manager had colluded with the fraudulent supplier to provide work, to provide invoices for work that was not done. And then the manager would ensure that the payments would go through, and then obviously they would get a kickback outside there. And this is something that we were able to establish through our investigation. Some of the recommendations or the mitigation strategies that we recommended to the company, again, was one, to strengthen the internal controls, including a very systemic review of their processes and adherence to procedures. We recommended an enhanced or an improvement of the background checks for all employees during the hiring process. This is to ensure that in future, if they hire someone, especially in senior management, they've done very thorough background checks to ensure that they wouldn't be involved in any such cases of corruption. Because as Zahir said, the fraudsters are the same. The people who conduct these frauds are the same. We also recommended them to consider legal action if they wanted to go that way, to ensure that they can be able to get back some of the money that they lost. Last one that we'd like to share was a very interesting one. This was a case of harassment and threats. So in this particular instance, we were mandated by a very prominent financial institution to investigate a distressing series of malicious poison pen emails and letters that were targeting specific individuals. And the point was or the aim of the investigation was to uncover who the perpetrator's identity, that is, who was sending these letters and emails, and their motivations. To give a bit of a background, poison pen emails and letters are usually, it's a form of cyberbullying that is emerging today, whereby someone sends malicious letters or emails to a particular person, usually anonymously, aiming to inflict harm. So they usually contain threatening language or false accusations or very harmful content that is meant to cause emotional distress or damage the reputation of the recipients. So this particular individual was sending these out to multiple individuals, but very targeted individuals within the institution. And obviously, they were meant to cause some form of harm. And so the investigation was to not only understand who was the perpetrator of this, but also to comprehend the motives behind these toxic communications. Was this someone who was disgruntled, a disgruntled former employee, a current employee? Was it someone who has nothing to do with the organization, or was it someone who had everything to gain from this? And so our investigation entailed first, forensic document analysis. So we looked at some of these letters and forensically analyzed them, looking at some of the patterns, the trends of these emails, how they were sent, the timings of them, who they were sent to, if there were any patterns that were linking the particular individuals who received these letters and emails. We also utilized forensic tools to trace the origins of the emails. This included looking at the network logs and forensic analysis of the suspect's computers to be able to identify some of these trends and patterns. So our investigation was very hard in this particular instance, but it was fruitful. We were able to, through the utilization of the forensic tools, we were able to identify the specific mobile device that was used to send these particular letters. We also utilized geospatial intelligence. Some of these letters were sent from a post office, which is not so far from the financial institution. So we're able to look at some of the times that people who were visiting this office and the letters that were being sent from there, and combining that and cross-referencing that with the document analysis and also interviews of the suspects, we were able to identify or narrow down to the particular suspects 2 or 3 individuals who were highly likely to have sent this particular letters and emails. And we were also able to identify some of their motivations. You know, we were able to look at the timeline of the communication of the events and identify any recurring themes and patterns in the messages, which showed now some of the motivations, like some of it were instances of personal grievances, you know, rivalries between 2 people. Some of it were conflicts of interest, and these guided our investigative efforts, and we were able to identify that these were internal people who were perpetrating this fraud. Some of the tailored mitigation strategies that we recommended to this client were, again, thorough background checks. So we recommended that they conduct very thorough background checks during the hiring process to be able to identify any red flags specifically that are related to behavior or conflicts that could escalate into a harassment. We also recommended behavioral analysis awareness training. This is providing training sessions to employees and even to managers on recognizing early signs of behavioral issues that would lead to such malicious letters and emails. And we also recommended that they establish confidential reporting channels. Again, as we said, confidential reporting channels are key to ensure that you are able to get a report of anything that is happening. So this was specific channels that we recommended to ensure any harassment or threats that are sent to employees will be able to be reported early and in advance, so that the employees are able to feel secure when reporting any concerns that they have. We also recommended that the supervisors develop clear protocols to intervene when signs of conflicts or inappropriate behavior is detected. That's a key. Those are 5 key cases that we wanted to share with you, and hope that you'll be able to get learnings from that. And the last part of this webinar, we'd like to look at some of the investigation best practices. So what are the standard best practices to follow when you're conducting a forensic investigation based on our experience? So the first thing, I'll just run through them very quickly, is to plan the investigation. You obviously have to clearly define your objectives and your scope, allocate the specific resources that you need, and clearly develop a detailed timeline with key milestones on the roadmap of the investigation. The second thing is information gathering. This is a key area. So you need to employ a variety of data collection methods, such as digital forensics, computer forensics. We talked about geospatial intelligence, digital tools that we will be able to capture electronic evidence, and any such tools. We also recommend preservation of evidence. So this is where you implement tools to preserve evidence. And this is usually a chain of custody. And then if applicable, we always review the whistleblower testimony to ensure that we have a very good understanding of the investigation before we go in. The next step is process walkthroughs or system walkthroughs, consultations, and interviews. This is where we conduct comprehensive walkthroughs of the relevant systems or processes of the organization, so that you're able to understand the context of the organization, the processes that are involved, and any key nuances particular to that organization. And this is obviously through consultations with key staff and even interviews. The next step is data analysis and forensic techniques. So here you can utilize or employ a variety of tools or techniques to analyze the data, to be able to get usually with forensic investigations, it's like looking for a needle in a haystack. You have a big, because you don't go in, knowing what you're going to look for. So once you conduct the system walkthroughs or process walkthroughs and you get a large number or a large quantity of data, you now need to look for the smoking gun. What's the hair? So then we employ a number of data analysis and forensic techniques, such as comparative analysis, pattern analysis, trend analysis, and forensic accounting. We also, at this stage, employ computer forensics and analysis, that is using imaging tools to obtain an image and analyze the image of a suspect's computer. After we have gathered all our findings, you document the case, and this is documenting the chain of custody. So the chain of custody is usually a meticulous record of all the collected evidence and the steps that it followed before it got to your hands. And this is key for, in case the forensic investigation needs to withstand a court process, this is a key step. And then you combine or document a comprehensive case file, which encompasses all the relevant documentation, evidence, and findings that you have gathered during your investigation. Then the next step is a factual reporting of findings. Usually in a forensic investigation, you do not report on your opinion. Even if you go in believing that so-and-so is a perpetrator, or this particular issue is actually a fraud issue, you don't report on your opinion. You present your very factual findings. This is findings that are based on factual evidence that you have gathered, that you have documented in the previous steps. So you present this, and once you do that, you're able to draw clear conclusions based on the evidence that is gathered and not based on your opinions. Then you provide recommendations, as we were sharing in the case files. We provided recommendations on actions to be taken, both against perpetrators. For some perpetrators, you can recommend legal action or internal discipline, and actions to be taken to remedy internal controls that were either circumvented or non-existent for the fraud to occur. And then after that, the next key step is management or board level decisions, where key management make decisions on the perpetrators, whether they take internal discipline measures or criminal suits or civil lawsuits, involve a legal team if necessary, and discuss things like summary dismissal and all of that. And also this is a step where management discuss, make a decision on which recommendations to adapt in the order of the risk rating which we provide. We also feel that it is important to share with you the ABCs of fraud investigation. So in case you find yourself conducting an investigation and you need to know how to approach the investigation and the data that is relevant, we normally call it the ABCs of fraud investigations, which is A, standing for accepting nothing, and believe no one, and confirm everything. So with accepting nothing, with this particular principle, you are meant to approach all data and claims with skepticism. This includes everything from the whistleblower report to the interviews. So you approach all data and claims with skepticism. You have to verify the authenticity of documents, transactions, and any identities that are there. And as I mentioned before, you require concrete evidence before you make any decisions to proceed while proceeding within your investigation. Believe no one. This is the second principle with which you stand by. And this principle underscores the necessity of earning trust rather than giving it freely. And the key points for this is maintaining a cautious stand towards individuals and information. Usually in a forensic investigation, you will get a large number of information, a large number of documents. People will come and tell you this, come and tell you that. Once people hear there's a forensic investigation going on, some people are spooked. Some people will come and tell you, look here, this person is a perpetrator. So you have to maintain a cautious stance because you don't know the reasons why anyone is telling you this information. So you have to, again, thoroughly vet all the parties that are involved and independently verify information from more than one reliable source before you take it up as being a fact. And the third principle and final principle is confirm everything. This principle states the importance of double checking information to ensure its accuracy. As we talked about in the case files, a lot of fraud investigations usually involve forensic accounting and documentation and analysis of financial records. So you have to thoroughly validate all facts, all figures, and all claims to make sure that you have taken all steps to confirm everything. You have to cross-reference information from multiple independent sources, as we have talked about before. And you have to maintain a meticulous record of all confirmations so that as you go along, as you write your forensic report and any steps that you will take after that, you have a meticulous record of that. Obviously, you wouldn't want to be in a case where you wrote something in the report and this was not, you don't have the supporting document or the information for that. Finally, we'll share part of the final steps for this webinar is to talk about the fraud prevention and detection techniques. So these are techniques that your organization can use to prevent and detect fraud in case it occurs. So again, as we know, and we've talked about in our previous webinars, prevention is better than cure. So you need to be able to prevent fraud before it occurs. And in the event that fraud occurs in your organization, in the highly likely event that it occurs, you need to be able to detect it early enough. So some of the key steps to ensuring that you're able to do this starts with leadership commitment. So leadership usually should set an example by demonstrating ethical behavior, what we call tone at the top, and communicate a zero tolerance policy for fraud. You also have to implement clear policies and procedures, so clear reporting channels and clear processes and policies and procedures for each step within your process, your organization, your business, to ensure that anything that it needs to be covered within the procedures or policies is covered. Training and awareness is a key step. You have to train your employees, your senior management, like we talked about, behavioral analysis training, train them to be able to root out fraud, to root out any unethical behavior that they may establish. And regular training on ethics and compliance is also very key. Feedback and communication is a big deal. Usually, this is a key step, especially with whistleblowers. So you need to be able to provide feedback to whistleblowers in case fraud is reported, to encourage them to encourage all employees, both the whistleblowers and other employees, to report fraud or any instances of unethical behavior. And you also need to communicate successes and improvements, successful fraud investigations or successful improvements to processes that you have done. Prompt and fair investigation is a key step to prevent fraud. So you need to be able to investigate fraud promptly and provide a fair investigation into the fraud. Usually, with many companies that we have worked with, by the time they either contract us or they do the fraud investigation internally, it's been a long time. So some of the supporting documents, the smoking gun, so to speak, the needle in the haystack has been far, hidden, or it has been deleted, and it makes it very hard to come up with the perpetrators and promptly and properly investigate the fraud. So you need to be able to work quickly in case you detect fraud in your organization and investigate promptly. The last step is anonymous reporting channels, as we talk about time and time again. Tips are the highest way in which fraud is detected, and to be able, and most people, both employees and external people who report fraud, usually prefer to do that anonymously. So you need to be able to establish anonymous reporting channels to protect these whistleblowers' identities and ensure that these channels are accessible and well publicized, so that anyone within your organization, from the top management to the lowest staff who observes any form of unethical conduct, can report this conduct. So that's it from us for this particular webinar. I think in summary, we've looked at the introduction to occupational fraud, some of the legal elements of fraud, the main categories of it. We looked at how occupational fraud is detected. We've given you some case files of real life fraud cases that we have investigated ourselves. We've talked about how to conduct a comprehensive investigation, some of the ABCs of fraud, if you remember that, and the fraud prevention and detection techniques. So as we conclude this webinar series, it's both gratifying and enlightening to reflect on the wealth of knowledge that we've garnered through this series. We've embarked on this series to unravel the complexities of fraud prevention, detection, and management. And today, the main focus of this series, this last installment, was to stand at the intersection of both theory and reality. So as I mentioned before, we started the series from looking at managing whistleblowers, the pivotal role HR plays in safeguarding against fraud, steps to take once you detect fraud in your organization, and now we've concluded with actual real-life incidences, real-life case studies, where we moved beyond theoretical frameworks and talked about particular nuances of actual fraud incidents that we've investigated before in our practice, in our many years of experience. So analysis of these case studies I believe not only reinforced the importance of staying vigilant with fraud in your organization, but also underscored the necessity of continuous learning and adaptation in the face of evolving fraudulent schemes. As we know, we're living in a world where, with technology moving, fraud is rapidly changing. And we confronted some of the harsh realities of this fraud, and we hope that you have emerged with actionable strategies to fortify organizations against any potential threats. So as we part with this series, let's carry forward some of this collective wisdom that we've shared with you, some of these ethical business practices, and ensure the resilience and integrity of our organizations. So thank you, all of you, for attending and participating in these discussions. We urge you to remember that the fight against fraud is an ongoing journey, and with the tools and insights that we hope that you've gained from this forensic series, we hope that you can collectively build organizations that stand resilient against the ever-evolving landscape of fraud. So thank you so much. And we hope that you'll join us for our other series we have coming up that Meha will share with you. And if you have any questions, please feel free to share them in the chat.
Thank you very much. That was a very insightful presentation. Thank you, Zahir Sheikh, for introducing this webinar, and thank you, Roger Muya, for unraveling the complexities of real fraud cases. I'm sure we all learned a lot of things that we can take back into our organizations. And as he mentioned about the whole webinar series, for those of you who missed out on the previous webinars, they're available on YouTube for your viewership for free. So feel free to share it with all your colleagues and all your friends, because this is a very insightful webinar series and we hope to have some more. And next week we have a corporate finance webinar that will be on Wednesday, and I'll share the link for that by tomorrow. Thank you so much for joining us here. Let me see the questions. So one of the questions was, what should you do when you become aware that the MD is the one who conducts the fraud?
Right, so I can take that.
When you, it depends obviously on the particular nuances of your organization, but usually the key steps that you've shared is first to gather all evidence that is particular to the fraud in a very discreet manner. So you need to be able to, I think an MD is a person in a senior position, and once they identify that you're gathering evidence against them, it may cause issues for you. Or for the investigation team. So you need to be able to gather any key evidence that you have against this particular fraud. You need to be able to go to, after you gather the evidence, we normally recommend going to your board or any senior management that is above the MD to report this particular instance of fraud with supporting documentation, so that it's not just baseless allegations. If it's a donor, you write a whistleblower report and you share that, and then after that you let the process take on the forensic manner, the forensic investigation process that we have just shared. Usually the senior management will decide on whether to conduct an internal investigation or to engage independent auditors, which is usually the better practice, such as ourselves, to come and investigate the particular form of fraud. And then they will be able to make the particular decisions, such as whether to retain or dismiss the senior manager while the investigations are going on. And we'll be able then to take up the investigation from there. So the key step here is to gather any evidence that you may have that could allege or could support this alleged fraud.
Yeah.
Thank you, Roger. And we have one more question from Bernard. He asked, is it forensic accounting or forensic auditing?
Good question, but forensic accounting and auditing is, I can say, one and the same thing. It's forensic accounting and auditing are both specific ways in which you review financial records to be able to uncover key forms of evidence that may indicate fraud. So it's more or less one and the same thing.
Thank you. I think that's all the questions we had today. There were a few other questions that were answered live by Zahir. You can take a look in the Q&A tab. So one of the questions was, in absence of an audit tool like IDEA or Alteryx, if one wants to identify fraud patterns in the data, how can it be done? And the answer is, first, develop a fraud hypothesis. That is how fraud might be happening. Then get relevant data into Excel and test against your hypothesis. The second question was, apart from Benford's law, which are other commonly used methods to identify unusual data patterns? And the answer was, follow the same procedures as I just mentioned below. And the last one was, please assist with examples on internal controls which you recommend in accounting frauds and corruption cases. And Zahir answered, all controls over assets are important because a fraud is only complete when the fraud has your money or asset. So use a fraud risk assessment tool to highlight high risk areas or fraud in your organization. So that's all the questions we had today. And thank you all so much again. We had a huge turnout today and we hope to see you all next week. I sent the webinar link on the chat for our YouTube page. Thank you so much and hope to see you all next week.